Deloitte India is pleased to launch the second edition of its CFO Survey 2012. This survey is based on responses received from a number of CFOs covering various companies, both listed and unlisted, across various industry sectors and of various sizes from turnover less than rupees 500 crores to over 5,000 crores. The Indian economy had showed promising signs at the start of 2012, where we had conducted our inaugural survey. At this point in time, inflation had dipped, industrial production and output was on the increase, and many of the survey respondents were far more positive about the impact or the lack of impact that global developments would have on their organization. In fact, as many as 67% of them believed that their future was bright despite what was happening globally. This second survey, on the other hand, was conducted at the end of July 2012 when the economy was going through more challenging times. The situation now has further worsened due to the ongoing impact of concerns in Northern America and in Europe, the widening fiscal deficit in India, the impact of rainfall on our agricultural production, and various other factors, including a downgrading of India Incorporated by various rating agencies. Clearly, one of the other critical factors is the role of the government going forward in formulating economic policies to address the scenario. This survey thus provides a perspective on how the worsening global scenario and some of the India-specific factors have evolved CFO thinking and what they will then do in terms of their organizational behaviors. The findings and analysis of this survey is intended to provide CFOs with information on what their peer group is thinking about these developments and how they're going to drive their actions going forward in the light of this economic scenario. The survey results show the CFO's apprehension towards most of the major macroeconomic factors, with almost half of them expressing their serious concerns and indeed negativity. CFOs are really looking forward to those economic policies that would provide long-term sustenance, bolster economic growth, and enhance investor confidence. The ripple effect of the annual budget still continues, with as many as 61% of the CFOs surveyed expressing concern about inflationary trends and cost structures arising out of enhanced service tax and excise duties. The concern over increased industry regulations continue, with some industries being more pessimistic than the others. Accordingly, as many as 43% of the respondents expressed concern over the political direction towards economic reform. In addition, consumer spending in India has been the weakest in the last 7 years, and 15% of the respondents indicated a concern about the impact this would have on their company's products. As the government continues to maintain high interest rates, organizations continue to cut back on their investment spending and focus on containing costs. So, based on the responses from the CFOs, we can clearly see that many of them are now really dependent on government and political interactions to ease some of these problems and concerns that they're facing. 60% of the CFOs surveyed mentioned that they would consider accessing foreign markets to hedge their risks. They would do this in a number of ways. For example, increasing exports to untapped overseas markets to counter the domestic fall of demand, sourcing from those countries which provide a better exchange rate differential, and last but not the least, securing long-term exchange contracts on a forward basis to secure themselves going forward. Interestingly, the majority of the multinational companies covered by our survey were more open to longer-term foreign exchange contracts rather than the Indian domestic companies surveyed. Different industry segments covered by this survey have indicated their own flavor of concerns arising. Regulations remain an important concern, particularly amongst financial services, energy, technology, media and telecom, and consumer business segments. CFOs look forward to significant government intervention and involvement by means of appropriate policies and regulations to address the current industry concerns, growth slowdown, inflationary prices, etc. Inflationary pricing trends, changing cost structures, and capacity utilization are the primary issues for the manufacturing segment across several industry verticals. In addition to the growing challenge to maintain profit under dual pressure, the slowing revenue and increasing cost, organizations are struggling to achieve economies of scale due to slowing production volume. For the consumer business, life sciences, healthcare, and technology, media and telecom industries, supply chain challenges are particularly evident as organizations need to manage issues around rising input cost and pricing. The unavailability of trained resources and the challenges of inducting, developing, and maintaining a skilled and trained workforce continue to remain a concern for consumer business, technology, media and telecom, and life sciences and healthcare businesses. Capacity utilization is a major challenge for energy, life sciences, healthcare, and technology, media and telecom businesses in the face of consumer demand falling and their requirement to strive to get higher rates of return on their invested capital. For the financial services sector, both the availability and the costs of raising capital continues to remain a major concern. What is interesting to note is that CFOs from small and medium-sized enterprises have a more positive outlook than their larger counterparts. This outlook could have been driven on the one hand by the government's efforts to ease lending to smaller and medium-sized enterprises, and on the other hand by their enhanced confidence on organizational capabilities compared to their larger counterparts. In summary, it is quite clear that most of the CFOs are going through a major strategy rethink for their organizations. CFOs are clearly thinking very hard about the need and ways to continue their revenue growth and pursue cost containment strategies. Their emphasis on managing their risks of their investment better. These CFOs are increasingly realizing that risks should be a matter of choice, not a matter of chance, and they are being more prudent with their business investments, which is very, very typical in a slowdown scenario. In addition, their future strategies are likely to consider accessing foreign markets to hedge their risks and provide better consumer solutions and products. After all, we've always seen that when the gold rush ends, there is always greater innovation leading to better products and services.